My name's Ted Thatcher, president of Bright Lake Wealth Management, and you're watching Taking Stock.
Time to rock and roll. 2 minutes to go here into the closing bell. Oil strengthening here in the afternoon session, and that has put a fair bit of downward pressure on equities, despite the S&P and the Dow being in positive territory during the morning session. A different tale to tape the last few hours here into the close. Peter Tuchman, the Einstein of Wall Street, joins us now to kick off the broadcast for his take on exactly what has been happening up as we saw oil go up. We saw equities fall.
Right, I think that was part of it, but I think it's a number of different things. There were bombs heard over Iran, which I think sort of took down the second leg of that sell-off, right? It's the second leg of the sell-off. You know what, markets feels a little tired. We've had such strength every single day, right? The advances versus declines have been great, and I think we've had a big breadth of the marketplace. You know what? Markets go up, markets go down. We have not had sort of a down day. For me, the whole afternoon we had stocks to buy, and it was sort of a desperate attempt for them to take this market positive. But that 2:30, 3:30 sell-off when we heard bombs over Iran, when that news hit, we sold off down 40 handles on the SPY like that, and that kind of gave the sell side a little bit of momentum, and so it kind of broke that. The strength we've been seeing.
Yeah, and of course it comes after all-time highs for the small caps for the NASDAQ, the
day.
S&P. We got a really important jobs print tomorrow morning for the month of April.
We have
for
nothing to
investors
complain
digest.
about.
Some macro narratives as we had.
And technical resistance at these levels.
Yeah, absolutely. So we'll bring you back on tomorrow. We'll talk more about it. Peter
Happy
Tuchman,
trading.
time for the bell. Corning set to do the honors. All right, and there you have it, your final tale of the tape. There's a lot going on down here. The S&P 500 selling off 0.4%. The Dow 30 down 0.6. The New York Stock Exchange Composite Index also in negative territory on the day, down 1.1. And the small caps, the hardest hit as is to be expected for downward selling pressure. The Russell 2000 down 1.6. Into the closing auction, it looks as if we'll have fractional gains for telecom and consumer discretionary. The other 9 sectors of the S&P 500 down in a pretty notable way. The Mag 7 is mixed. Actually kind of a strong tape for a lot of the big tech stocks, ironically, but not doing very much with regards to breadth and the broader market. Let's bring in Eric Criscolo, good friend of ours on the show, market strategist here at the New York Stock Exchange, because he's far smarter than I am to help us make sense of what happened here today. So we had some new Iran headlines, some developments over so-called Project Freedom. From where you looked at oil kind of inching higher, equities inching lower, how did investors react this afternoon?
Yeah, I mean, it was kind of more or less the same playbook, right? Where yesterday you saw a lot more optimism around Iran, maybe a light at the end of the tunnel. Then all of a sudden today, I kind of flipped a little bit, right? So we were back. We were thinking everything was maybe inching toward progress, and then the script got flipped a little bit. That kind of started the downtrend that we saw. I mean, we were down 0.4%, right? I mean, this was a small decline, nothing major, but it just shows you that Iran continues to be, in the minds of the market as they digest a huge, flow of earnings still, and you're seeing some flows, swing this way and that. But generally, it was just reacting to the macro, basically.
Yeah, how about the software bounce back? Now, I'm going to do a deep dive on Snowflake coming up here in just a bit, but Datadog up 31%, MongoDB down 10.6%. Obviously, this is a sector of stocks, Eric, they've been very badly beaten down previously, so maybe some more room to run up, but it's still nice to see it bounce back for some of those names.
Yeah. I mean, that sector, like you said, that group has just been decimated, the software names, especially compared to the semis names, right? The semi-equipment names have just been absolutely on fire. They are carrying the market. So, we've seen every now and then, we've seen a blip of a rotation where, software gets a bid, semis sell off. That kind of happened today. I mean, we'll see what kind of momentum it is, but semis are definitely extended. Software is definitely oversold. So, there is a chance that kind of flips for a little bit longer, going forward.
How are you viewing winners versus losers? If there are many losers so far here in earnings season, because obviously it's one thing to beat, it's another thing altogether to give guidance that the street really wants to see. And sometimes the stock can report all the right things, and they still kind of get punished like a Palantir.
Yeah, we have seen most companies beat on top line. They beat on the bottom line. I think it was running about 80% for both, which was above the longer-term averages. The guidance has been mixed, not necessarily cutting guidance, generally speaking, but management teams have just been cautious. So, like, if they beat, they don't raise guidance, right? They just maintain guidance. So they don't price in the guidance, or they don't price in the beat into their guidance. So they're being cautious. We've also seen the winners, the ones that have the ones that have beaten their expectations, they don't rise as much as maybe they thought they would. Meanwhile, the ones that miss expectations are getting punished more on the downside.
Tomorrow morning, 8:30 a.m., a full hour before the market opens here on Wall Street, we'll get the April jobs report. Low fire, low higher backdrop environment, maybe for the Fed to contend with. What will you be following on that print before we kick off trading?
Yeah, I mean, based on all the data that's come in for the labor market, including today's the weekly jobless claims, I mean, it's been a very good labor market as far as the data goes. Like you said, low hire, low fire. We have been in that trend for a while now, and it's kind of that's kind of the reason why the Fed was able to, or has pivoted from, concerned about employment going forward. They've kind of pivoted back to, we have to get inflation down. It's still above 3%, and you saw that kind of pivot, especially with the last meeting. You saw more dissension, especially around the commentary in the statement. They want to focus more on the inflation side of things.
Yeah. I hope you come back next week, because we got the president meeting with Xi Jinping,
Yes.
which out of any of the other market movers maybe promises to be the single biggest market mover that we'll have in the middle of next week.
You would think so, but who knows?
Yeah, exactly. Who knows? Because sometimes the market moves, and you're kind of surprised why it did. Eric Crisco, thanks for being here, brother. Nice to see you.
Always a pleasure.
We'll do it again soon. Todd, we'll head this way. Here's the biggest analyst calls that moved today's tape that you may have missed early this morning. First up, J.P. Morgan upgrading Freshpet to a buy. That's true, saying buy the weakness after earnings this week. The stock sold off 8% in yesterday's session. Is up about 1% today. So, hey, I like that hat, my man. Next up, Barclays reiterating Microsoft is overweight. After investor meetings this week, they added that growing Copilot adoption is a tailwind. Shares of Microsoft down about 12% since the start of the year, Finally, Wells Fargo reiterating Disney as a top pick. New year, new management. Early signs, they say, of direct-to-consumer improvements. Shares of Disney up 9% in the last 2 days alone. Let's take a look here at shares of Halliburton, down about 3% on the tape after Barclays upgrading the stock, ironically, to overweight. They call this the best setup for oil field services in the last 20 years. Shares of HAL up about 40% from the start of 2026, up 100% over the last 52 weeks. Todd, let's take a look here at Snowflake, as we were talking about the software trade here, up 10% on the dot for SNOW. Software stocks having that big bounce back rally, shares up big after a few weeks of relatively range-bound trading action, I would argue. Shares are down about 30% year to date. Snowflake set to report the latest quarterly results on May 27th. On the latest iteration of the J.D. Durkin Show, the only live independent show from the New York Stock Exchange, I recently spoke with Gav Blacksberg, the CEO and founder of Wolf Financial. We talked all about the ways that artificial intelligence is now being used by everyday retail investors. Take a look. Got to start with artificial intelligence, the ways that AI is changing how people find new ideas and how people trade. Is it actually making you think investors smarter or just a little bit faster? Hi, Tyler. And maybe doing a lot of the same things that they were doing?
I think both. I think for me, one of the coolest things that's happening with AI is it's making research a lot more easy and accessible for people, right? Beforehand, people were curious about a stock. Maybe they went ahead and they said, typed into Google, is this stock good, or something like that. And they were getting some of the numbers. You could look at a balance sheet, you could look at income statements. But what you can do with AI is you can basically do full deep dive analysis without having to have any prerequisites of knowledge on your end, right? You could say, hey, Claude, you're a full-scale analyst, right? I have this stock. I need a full breakdown. I need projections. You're going to build me a DCF, right? All of these things that you couldn't do in the past or were very difficult to do without having the proper knowledge are now accessible to everyone. And so I think that it is really, really helpful. And also, you can use AI on a daily basis to find ideas, to match them. We actually just rolled out a few months ago a product called Rallies from the Wolf team that allows people to connect their portfolios. And inside every single day, it'll tell you like, hey, this stock had this happen on earnings. Let's chat about it. And it has like an AI built into it to talk with you about your portfolio.
You talk to retail every day. What is the enthusiasm that retail investors have for the new suite of AI-empowered trading products?
I think people are trying to lean into it, and there's going to be people that hate AI, right? And they're just like, no, never in my lifetime. I reject everything. It's all AI slop, right? But there's also going to be people that actually see the ability and the power of being an early adopter, and I think those people are going to actually be the ones that take it to the next level. For me, for example, with Spaces, Twitter Spaces. That's how I got my start. I was the first adopter, right? I was the first person who's like, I'm gonna do this on large scale. I encourage people, like, if you see opportunities with AI to do research, do investments, don't fall behind. Be the person that actually takes the step forward. It may not be perfect now, but if you start learning how to use it now, as the tools get better and better, so will you.
I wonder how you're thinking about the evolution of financial literacy, not just where it's been over the course of the last few years of your career, but where you see it going. What's actually working in terms of building smarter investors today?
Good question. I think that it's twofold. One, I'm obviously on the social media side, right? And I think social media has become a huge essence of where people are becoming self-directed investors. Obviously, people can go to a financial advisor at any time, and that's great. I actually encourage people to at least have a person also in real life that is certified that they're talking to, whether or not that person is managing all, some, or none of their capital. On social media, though, it's going to be like picking who you get your information from smartly, right? I think that you want to look through and find people that are not pump and dumping. You want to look for people who actually their care is their audience. They're promoting things because they believe it will make you do better, not because it's going to be making them rich because someone's paying them to say it. And I think that that's the piece. So carefully dissecting who you're following on social media, having someone in real life that you can use as a companion and bounce ideas off of. And then I think just actually trust but verify. A lot of people talk about long-term holds. I'm a huge fan of it. Most of my holds are long-term, but unless you're broad-based ETFs, if you're doing single stocks, I think you have to regularly look at the earnings reports and actually understand what you're investing in.
On Twitter or X Spaces or any other platform, especially on social media, you do an incredible job, I think, reaching people where they are. What are a few of the top questions? What do they come to you with, or what elements of the market are they hungry to learn more about?
Sure. So I think people are very much gravitated towards specific areas of the market right now, which you've probably seen. Space is a huge area right now that's taking off with the SpaceX IPO, a variety of other companies, Rocket Lab, et cetera. People are very hungry for information in this because they see it as a area of the market that can take things to the next level, expand out, Mars, exploration, Elon Musk is associated with it. But I think that the more interesting area is the one that we've already touched on, and it's AI. And for me, the essence of this is actually simple in how I break it down. I often ask my audience, I like to poll them, ask them questions. And I say, one of the popular questions I throw out is, what is the most valuable thing in the world? And you get a few answers, but one answer consistently is at the top. Any idea what it would be? The most valuable commodity, most valuable item, it's time. People immensely value time, especially the richer you get, the more you value time is what it seems. And so AI is going to save people massive quantities of time. It's going to create almost like a second economy. Have you ever seen the joke on TikTok, guys, like, I wake up at 4 a.m., 4 a.m. to 8 a.m., day one, 8 a.m. to 12, day two, 12 to 4. I'm 3 times ahead of you by now. Well, AI actually kind of makes that possible by saving people time. And so I think people are fascinated by this segment.
Welcome back to the show. John Serafini joins us now down here live on the trading floor. He is the founder and CEO of Hawkeye 360, joining us not just for any average day, but on IPO day nonetheless. Thanks for joining us and congratulations.
Thank you, JD.
What a great listing. Now, you specialize in signal intelligence from commercial satellites, which sounds awesome. And I have no doubt the tech is even cooler than it sounds. What's the main problem your technology is solving?
Sure, what we do is we operate a constellation of small satellites that fly uniquely in clusters of 3, and they geolocate, sense, process, analyze signals data. Generally, any signal above a watt in power, between 30 megahertz and 18 gigahertz, we can detect from space, process and analyze, and convert that into an analytic product that we provide to our customers.
Why was right now the right time to finally go public? I have no doubt this is something you and your team have probably considered for quite some time, but we are seeing a notable uptick in IPOs, and yours was quite the listing today.
Yeah, thank you for noticing that. We have wonderful 2025. Over 70% growth year over year from 2024 for our heritage business, 21% adjusted EBITDA. We proved that you can be both high growth and high profitability as a defense technology company, and so it's the right time for us to build on that momentum and take it into the public markets and, as you know, achieve over $400 million worth of investable proceeds moving forward.
Are there things that you most hope you'll be able to do now as a publicly listed company that maybe you were previously prevented from doing before taking this step?
Well, folks who've been watching us for a while know that we acquired ISA back in December as a meaningful acquisition for us. pretty significant amount of revenue, profitability, and exquisite technology fit. So we've built some institutional muscle for making acquisitions, and we can couple our organic growth with potentially inorganic growth more often going forward, and the IPO proceeds will help with that.
Could you give us a bit of a primer on ISA and how that relationship comes together? What does that do for your business, for anyone who might be a bit unfamiliar?
Sure. So ISA is a 27-year-old company down in Texas. They're the very best in the world at processing data coming off of national signals intelligence satellites. They're now a big component of Hawkeye, and their processing functionality will make our own processing functionality that much better for all of our customers around the world.
What do you see as being some of the biggest opportunities in the space-based intelligence game? What most excites you? Not only about where the technology is today, but where you most suspect it will be tomorrow.
So what's important for us, given that we're an operational element around the world, and just about every geopolitical hotspot, Hawkeye is creating value for our customers, is delivering value to the warfighter, which means that we have to be relevant with timely and overhead and accurate capabilities delivered to the warfighter quickly. All of that creates success on the battlefield.
Well, speaking of success, quite the successful IPO down here at the New York Stock Exchange today. I know it's been a long day of media interviews for you. All the more grateful I am you took time for us after the bell. John Serafini, founder and CEO of Hawkeye 360 on IPO day. Congratulations.
Thank you, JD.
Thanks for being here. A lot more Taking Stock coming up live from the trading floor of the New York Stock Exchange right after this. Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence. First up, at this hour, the crypto majors are down. Bitcoin down at 80,156. Next up, Meta-backed, Scale AI winning a $500 million defense contract, 5 times its prior deal, as the Pentagon expands use of artificial intelligence across military operations. And finally, OpenAI and Anthropic, they are both seeking to acquire consulting and engineering firms, the bet being that the real bottleneck in artificial intelligence isn't the models, but getting them up and running inside of enterprises. All this week, we're bringing you continuing coverage of Consensus 2026 down in Miami, a terrific event. Earlier today, FinTech TV lead anchor Remy Blair caught up with the Chief Business Officer of Ava Labs, John Nahas. Take a look.
Welcome to FinTech TV. I'm Remy Blair. We're coming to you from Consensus Miami 2026, and there's been plenty of institutional interest in blockchain, while the big firms are eyeing the decentralized tech for quick settlement as well as 24/7, among other benefits. But some of the challenges that they face remain on the regulatory front, and they also require privacy to safeguard their data. Well, joining me to weigh in is John Nahas, Chief Business Officer for Ava Labs. John, great to have you here.
Thanks for having me, Remy. Great being here.
Well, you and I were talking about how Consensus 2026 differs from other events that have been taking place this year. So give us your take on what institutions are talking about on the ground in Miami.
It's a number of things, right? I mean, I think over the years you've seen a progression. And first and foremost, what I see here is a much more diverse group of people, both from institutions and enterprises. Back in the day, it used to be the innovation teams that would come and dabble. Now you have big banks, institutions, asset managers, and everybody in between sending full teams and embracing the technology for what it was initially, I think, built for, right? So we're seeing things that used to be long-term horizon projects shrinking in scale. They want things out faster, sooner. They want to bring new assets to their customers and their clients, and also utilize the technology for their own business needs.
Yeah, and while I have you here, you are the CBO over at Ava Labs. So tell us what you're focused in and what you're locked in on as we head into not just the rest of this year, but also beyond. And tell us why.
Absolutely. So Ava Labs is the team that supports the Avalanche blockchain. Avalanche differs from many other blockchains in the sense that others are general purpose layer one blockchains. Everybody kind of competes to use the same network. We have the ability to launch custom application or business specific or jurisdiction or compliance specific blockchains and have interoperability between them. So our focus from day one, 5.5 years ago, was to tokenize the world's assets. And I think we're at that point now where the world's assets are coming on chain. Some can come on public chains. Some will need private chains. Some would need permission chains. Some will need privacy. Some will demand privacy. We have the customization to allow people to build the blockchain for their business or their use case or whatever it may be. I think we're at the end of the beginning of the first generation of blockchains, which was come build your application or business or deploy your asset on our technology. The technology is the supporter of the business. So our overarching goal is better business, helping companies like Broadridge, JP Morgan, the Cleveland Cavaliers, the Detroit Pistons, Konami, FIFA, you name it, build their own businesses on blockchains, seek ways to monetize and provide better services to their customers, and as well to operationalize workflows and save on costs as well.
And finally, before I let you go, Consensus has a melting pot of not just TradFi as well as DeFi. And we all know that this is becoming a fast, crowded space. So do you see rising tides actually lifting all ships here?
Absolutely. I mean, I think for the longest time, our industry was very inward facing.
Yeah.
It was, blockchain against blockchain or protocol against protocol. A rising tide brings everybody, right? Like, I don't believe that there will be a single or a dozen blockchains. I think there'll be eventually dozens and hundreds and thousands of blockchains because the world will come on chain. It'll become digital in the same way that it became electronic, and the blockchain rails will move value in the same way that the internet moved information a decade ago. It's just going to take us time, and that tide will rise all boats. I mean, especially with the convergence of AI and blockchain as well. AI agents and AI applications are going to need rails to move value. That is what blockchain was built for from day one. So I think we're seeing that convergence there. We're seeing an openness to take on new technology. I think the blockchain on the back end aspect is really going to start to proliferate. And we're seeing this with a lot of deployments and a lot of partners.
Well, I think that's really befitting you where you use the word convergence, given the fact that the theme at Consensus 2026 is convergence. So thank you so much, John. I appreciate your time. Thanks.
Thank you.
All right, time now for the latest headlines in the world of startups, raises, and rounds for your Thursday afternoon. First up, Bullish set to acquire Equiniti for more than $4 billion, aiming to combine traditional share registry with tokenized securities and enable 24/7 trading. Next up, Radix Arc set to raise $100 million at a $400 million valuation, using software to make AI models run more efficiently and reduce compute demands. And finally, Andreessen Horowitz raising $2.2 billion in a crypto fund, bringing its total digital asset war chest to nearly $10 billion. Scarlett Sieber from Money 2020 is now back to explain the ways that fintech companies really make money. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make that cash. Today, we're lifting the curtain on one of the finance's least understood but most powerful jobs, market making. And the company doing it quietly, globally, and at scale, that would be Keyrock. Keyrock is a market maker for digital assets. In plain English, that means they make sure markets actually work, that buyers can buy, sellers can sell, and prices don't swing wildly just because liquidity disappears. So how does Keyrock actually make that money? First, bid-ask spreads, buying slightly lower and selling slightly higher over and over again across multiple venues. Second, liquidity provision fees paid by trading venues or asset issuers who want orderly markets. Third, balance sheet services for institutions entering digital assets who don't want that chaos. And fourth, risk-managed trading strategies across spot, derivatives, and options. So here's the part that most people miss. Liquidity isn't just a trading problem, it's a confidence problem. If participants don't believe they can enter or exit positions cleanly, they stop showing up, my friends, and markets collapse much faster than people expect. Let's momentum check for a second. Keyrock's Series C in Q1 of 2026, backed by Standard Chartered's venture arm, sent a very clear signal. Traditional finance cares deeply about digital asset market structure, not just price. So what is the moat exactly here? Sophistication and restraint. Anyone can trade. Very few firms can manage risk across dozens of venues, multiple asset classes, and volatile conditions without blowing up. That discipline takes time, capital, and absolutely credibility. And that is how Keyrock actually makes money, by being invisible when things are calm and indispensable when they're not so calm. In finance, that's not just a business model, that's survival, and have a company that you want us to feature that has a survival mechanism like this, go ahead and drop it in the comments below, and it just might make that cut. Back over to you.
The April employment report is set to cross the wire tomorrow morning, which is Friday morning at 8:30 a.m., an hour before market open. We will also get the latest quarterly results first thing tomorrow from names like Wendy's, MSG Sports Group, appropriately so, with the Knicks up 2-0 over the Sixers, and the team at Sony. Your final tale of the tape: the S&P down 0.4, the Dow down 0.6, the New York Stock Exchange Composite Index selling off 1.1, and the small caps down 1.6. Salesforce, Nvidia, and IBM are your big Dow winners on the day. And that'll mark today's episode of Taking Stock. Thanks for watching. We'll see you again tomorrow. Woo!